Hey, welcome to this week's Market Watch. All right, biggest news of the week is the Fed's met, and really no big surprises when it came to interest rates. We knew that they were going to be holding rates steady, and they did. So they're not lowering interest rates, at least at this point. They definitely pointed to the fact that they're going to be lowering interest rates later this year. But, this is a really good time to remind everybody that, as much as the Fed's lowering and raising the benchmark rate, affects mortgage rates, not nearly as much as outside factors like inflation, like real number inflation numbers, the job market, and even more than that, how bonds and treasuries are traded. And, if you remember back to COVID, we had low interest rates. The Feds had the Fed's fund rate at 0, but they were doing something called quantitative easing, which, artificially pushed rates down even lower than what they should have been. And then I think it was in June of 2022, they started doing quantitative tightening, which actually pushed interest rates up artificially higher than they should be. And so the biggest news from the Fed was that their balance sheet runoff is going to be reinvested into treasuries. And what it means is it is a way for mortgage rates to start trading a little bit lower. So the bond market liked that. And, it's been another good week where interest rates have moved down, slowly but surely. But we're really getting to that point. This has happened a couple of times in the past where we got, right around that 6% interest rate, and we really started to see the market, start to wake up a little bit. So we'll see what happens over the next couple of weeks, but really a great week in the sense of just the direction we're going with all things mortgage rates, and that is it. Hope you have a great rest of the day and weekend.